Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY report for Monday, February 14th, 2022. Before we look at the charts, as usual, I just want to encourage you to please click like if you haven't already. Please click like each and every time you watch any content that Wicked Stocks uploads, including the Daily SPY report. It does help us out a great deal in being found on Wicked Stocks by others. You know, when they search for not triple Q, if they search for Daily SPY or SPY Analysis or S&P 500, and subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel, and that helps you, obviously, to see it early, certainly before the opening bell, so that you can prepare and use it for your trading and analysis. So let's take a look at the chart. I'm just going to sort of back up. Well, we're showing the big picture here, and you know, I probably should zoom in quite a bit and show that long-term channel bottom today at 446.26. We settled below several weeks ago, spent about a week below it, held nicely, then we pushed back above it, and it held nicely, and we got sort of trapped into that wedge. And at the time I'd mentioned, not comfortable assuming a bullish continuation into later Q1 unless we were to settle above that 459.58 former channel bottom. And this in light of the fact that the triple Q was sort of had yet to settle back above its respective channel bottom in the SPY at 446.26. I'll show that in a moment. But that the triple Q was having trouble even getting back, even retesting that former channel bottom, the same channel bottom essentially that the SPY settled back above and is now back below at 446.26. So I'm going to see this obviously as a sign of heavy trade, falling back below that channel bottom. Now the truth is, you know, once you close below it and above it and back below it and you sort of chop, it loses its reliability. But it's still there. It's still a long-term formation, and it still can be used on a daily basis, on a weekly basis. I have it weighted as a 3-star weekly resistance, in other words, can contain weekly buying pressures, and below which we're back on our heels again. And so we could take a look also. I think that this is actually quite relevant. I mentioned this last week, about a week ago. You know, West Texas Intermediate crude oil futures are presently testing long-term resistance. They did close just above this area, and I say just above by about 4 cents last week. 93.10 was the weekly settlement. 93.06 is that long-term speed line projected off the 2008 high. There's also a long-term channel top at 92.17 this week. So we're in this area, and while we did settle above it, I don't consider this a highly reliable buy signal. I think it deserves another week. A lot can happen in a week, and I do need to settle above this area by a 1% margin, as I've been saying all along. And as I tell my crude oil subscribers, I've been doing a daily crude oil letter for many years. So 92.98, this is the weekly chart. If we can settle Friday, well, can settle, as if I'm encouraging that. But if we do settle Friday above 92.98 by a 1% margin, that'd be 93 cents plus 92.98. That should take you to 93.91. If I'm doing my math properly, you should do it yourself. So 93.91 settlement or higher on Friday in the March contract, West Texas Intermediate crude oil futures. And we have another significant buy signal. It's been a series over the last year or so. This is the most significant test right now. And if we close above this 92.98 formation, in other words, 93.91 or higher on Friday by a 1% margin, then I'm looking for $115 a barrel in crude, and that could happen pretty quickly, especially with what's going on in the world with the Ukraine and natural gas and closing down pipelines and so forth and so on. So we could get up there in a matter of 3 to 5 weeks, perhaps, if all you know what breaks loose. But even if all you know what doesn't break loose, and we settle above that 92.98 formation by the 1% margin, 93.91 settlement Friday or higher, then I'm giving it 3 to 5 months at the most. That would put us in the late spring, early summer, 115.03. That is a long-term channel top, and that also can contain annual buying pressures. So the reason I'm bringing this up is because of the inflation element. that is so alive and well right now with regard to financial and trading considerations and where is the market going. And, the stronger crude oil is, and it's obviously it pervades our entire economy really. We see another 20% higher, at the pump, so to speak. That's obviously going to weigh on the economy, and I can't see anything but heavy trade then in the stock market. That was a long way for me to get to that. So here we are with the SPY again. This is a SPY chart, and I've sort of beefed up the upper 450s now that we see what's happened falling back below the mid 440s long-term channel bottom. I'm saying that the upper 450s, 457.63 to 459.58 can contain buying into March trade, and below which this market remains on the defensive into March through March, and we could over the next 3 to 5 weeks perhaps fall all the way back to 401.08, and I'll get to that in just a moment. Excuse me. Let's zoom in on this former wedge here that we settled back below on Friday. 446.26 is our weekly resistance. You can see the 459.58 former channel bottom. And if I zoom in a little bit more, you can see the 446.26 and that more horizontal structure that's short term at 443.42. And this is really our range of resistance, at least for Monday, and I think into midweek. It does open up, and so it's 443.42 up to 446.26. That is almost a 3-point range, and it'll continue getting wider. And as it widens out, I'm going to have to choose one over the other, I think, because I don't like to give real wide ranges for your trading, especially, for the short-term traders, the 3 to 5 day swing traders selling a wide 3 to then 5-point range, I think is kind of silly. But in any event, this is your resistance for the week, 443.42 to 446.26, and below which I think over the next few days we can test 431.24, which is nothing more than the low settlement price on this entire move, and 420.75, which is the move low in January, I think is a 1 to 2 week target. We could get down there pretty quickly, especially if we settle today below 431.24. I would expect 420.75 tomorrow. And then overall, we just might continue south into the very low 400 area. I've been showing this long-term channel bottom and combination rising 2/3 speed line that is in reach. This is our long-term support in the very low 400 area. If tested, can contain annual selling pressures. And, obviously we don't know if it's going to be tested or not, but I'll say this. If crude oil, for instance, that I showed earlier, settles at 93.91 or higher on Friday, I think there's a very good chance we're going to test this. Let's take a look at the support and resistance for today. Once again, the green horizontal line represents roughly where we closed on Friday. So you've got 443.42 to 46.26 overhead, able to contain weekly buying pressures, and below which I'm saying 401.08 is possible over the next 2 to 3 weeks. That could be pretty robust. It may be more like 3 to 5 weeks. Now on the way down today, 435.03 can contain initial intraday selling pressures. And if we break 435.03, then that 431.24 low settlement price is in reach on an intraday basis where we can place a daily low. And if we settle below 431.24, I think we're just a few days away from retesting that 420.76 low from January, where we could double bottom through the rest of the week. Now, I want to point out, I want to lean a little bit on the triple Q. And this is chart I showed how 420.76, I got 420.75. I'm not sure right now if that's 420.75 or 420.76. I'm guessing it's 420.76. And so the 420.76 low from January may well line up in the triple Q with its still targeted 328.55 long-term channel bottom that has been in play for about a month now since the triple Q closed below its 377.30 long-term channel bottom. This is what I was mentioning earlier, how the triple Q hasn't even been able to retest on that rally, that rebound rally from a couple of weeks ago, the 377.30 channel bottom, and it has failed since. And so 328.55 is calling if you will, the triple Q, and I think it probably will be tested, and it may well be tested this week, and it may well line up with that 420.76 low from January in the triple Q. So, as we get down into this zone, I think it's worth keeping one eye on the triple Q. The triple Q sort of led the sell-off. It was the early sell signal, and then the SPY followed through a few days later, as I recall. I think the sell signal below 377.30 was on a Wednesday in the triple Q, and the SPY sell signal below its channel bottom was at the following Friday. And so the triple Q is sort of calling the shots here in many respects. And if it does indeed, obviously, place an annual low at 328.55, and if that does happen this week, then that may well line up with double bottom territory for 2076 in the SPY. I just wanted to put that out there. So I think it's worth watching. If you're a SPY trader and that is your vehicle, that's what you trade, and you watch the triple Q, keep an eye. This is a daily support, and I'll have the triple Q going every day this week, the daily triple Q report. I'm sure you've already seen it at one point, and you should probably continue watching it through the week just to apprise yourself of that support. So if we do, as I say, close below 420.76, then the SPY itself can continue south into the low 400 area. Let's take a look at the upside. If we do, I don't know if we're going to push. Well, anything can happen. So if we happen to push or open today above 446.26, 453.05 is in reach today. That would probably take the better part of the day to achieve, and then closing above 446.26, we're likely to retest the upper 450s yet again within about 3 to 5 days. And that area, convergent channel formations, former channel bottom, newer descending channel top, 457.63 to 459.58. We tested that former channel bottom a couple of weeks ago. We came very close to that area the middle of last week, later part of last week, and we failed. And that is really the area that this market needs to get up and over and settle above to indicate a good first quarter low and maybe even a good low into later year. I would then anticipate that 479.88 high from late December within probably 2 to 3 weeks, and the upper 490s and climbing. I don't have that shown here today. That's that long-term trend line that we tested last September and again came very close within 1% of in November and December, and it's been holding nicely for 6 months or so, and I think it would be reapproached if we were to close above 459.58 any point this week, and it would probably take the better part of 2 months to achieve. I think that there's a good chance for a solid double top at 479.88 on the way up, and we could back off there for a week, 2 or 3. But I think ultimately, after everything that's played out over the last month or so, closing back above 459.58, I think you should prepare for the upper 490s, possibly by the end of March, end of April anyway. I'm going to leave you with the support and resistance for today. This has been a long video. I appreciate you sticking with it so far. And please click like each and every time you watch the Daily SPY and subscribe to the Wicked Stocks YouTube channel. I'll be back tomorrow for Tuesday's Daily SPY Report. You have a great day.